Hello, good day everyone. Welcome at a new update. Um, Today has been, I have to say, interesting. First, we had the news from the Fed in the United States, which said that they are going to use an infinite QE to help the economy, which caused the price to pump. We'll get to that in a few seconds. Then we had a press conference in the Netherlands in which they concluded that grouping together won't be allowed until the 1st of June. Well, that's going to be the date. Could be fast, could be slower, who knows. So what you can expect is probably a daily update for the coming 10 weeks as everybody is sitting inside and everything is closed. Drastic measurements, but we have to thank the people who were at the beaches and the parks the past few days. They were one of the reasons why we are getting this. So whatever, but it's at least time to develop some new skills and to work further on things I had to do. Always stay positive, right? Well, we had the Fed news earlier today, and the price pumped, which is a short-term pretty okay move, I guess. However, if I look at the price pump right now, it looks a little bit sad and a bit overextended. If we go to the stock markets, we can also see that it looks sad. Like, all right, we're going to do infinite QE, and the market drops. Infinite QE is going to quantitative easing is going to help the markets in the short term, I guess. However, imagine if the States has got to do something like we do, in which we are going to close everything down until June 1st. Around 30 to 40% will probably go without work. Probably 30 to 40% will lose their companies without a health insurance. Then you've got the coronavirus as well. So probably short-term infinite QE will help the markets. However, printing a ton of money long-term will only cause the market or the dollar just collapse and get hyperinflation. We know that from Zimbabwe, Venezuela, or even Germany in the 30s, 20s and 30s. So short-term, we should be probably seeing some relief on the markets, but that's a pretty tricky thing to say. Long term, I assume the dollar is in a very weak position, and mainly the majority of the fiat currencies are in a bad position, as probably a ton of countries will go bankrupt as well. So what I want and what I stated is that I want to long commodities and Bitcoin pretty soon, when the correlation flips or when the equity markets bottom out, because I think that they will be outperforming. We're going towards a depression in the markets that's gonna take decades, until it's probably 1.5 to 2 decades before everything is back up to normal again. That's what we are facing here. And then I just don't want to be in any fiat currencies or any bank run or whatever. I just want to have Bitcoin and gold and commodities in the near future to hedge myself in case of any problems. Also have cash. I mean, if there's a bank run, I just want to have cash already instead of being in line and just cashing out maybe 100 euros a day. Who knows? So we've witnessed a small pump due to the Fed news. It pumped to 94, I guess, in the futures markets and then dumped back down. Has to bottom out really soon. The pivot for me is the 18,000 level. That has to hold. If we hold there, we could see a rally of like 10%, 10-15%. The only reason it could happen is that coronavirus is just weakening, or there's more measurements coming. What can they do more? But if there's coming more, then we might see a short-term relief rally. Overall, if I see this, I don't see anything bullish. So I expect to see further drop downs on the markets, especially if you go to the stocks themselves. It's just looking like Bitcoin in 2017. It looks ready to just go wrecked. Every stock looks like it. If we go to Bitcoin, we've witnessed a nice push up, and I've witnessed some nice salty comments on my bearish view, as people became bullish because of it. Wonderful. But it's pretty much a nice technical bounce up from the 56 area I've discussed in the Cointelegraph article. If you've read it, you saw that the 56 level was a support level for me to watch. But I'm also interested in whether we can crack 68 to 71. If we can and flip it bullish, so for instance we grind back up, flip to 78, 79, find a support here and go further, then by that flip I'll become bullish, because then you can target 9.2 and maybe even 10.5, 10.8. But with this wick, I don't see many reasons to become bullish. I just see this as a bearish retest and just an upwards correction in a downwards moving market. There's many of these scenarios where we've done this after we've witnessed this slight bullish divergence, as we have discussed. Here we have seen one as well, rally upwards, and then we backtested the levels for support. Bullish divergence, rally upwards, couldn't even make a new high, backtest for support. Here even as well. The whole 2019 bottom formation was one in which we tested levels before we went further. Over here as well, bounce upwards after bullish divergence, retest of the lows. Here we confirmed it as well. Here we confirmed it as well. So the only reason for me to become bullish is when we flip 6.8 for support, or when we drop down, make a low at 4.2 or 3.5 and make a higher time frame bullish divergence. That's the second example that I will become bullish, because you become bullish at supports and bearish at resistances, or right? So all the moves up here, I'm just looking for shorts, and as I've closed the majority at 6.6, 6.9, I'm just chilling out here, playing some small ball altcoin longs and USDT, and that's it. For the markets, I just assume that there are two scenarios right now that could occur. Okay, we have got the bullish scenario, which I find less likely, in which we rally upwards, flip the 6.2 level and break above. There's a miracle needed to do that. For the bearish views, there's two scenarios. As you can see, I'm thinking that this is a rising wedge in which we test the 6.6 level, make a lower high and then drop down, in which I just think we're gonna go below 5.6 without any comment and then just bounce at 4.8. Through which we do something like this as the major drop, might be bouncing at 5.6 for a little. Second scenario that I'm watching is that we take the highs and then drop in the same way downwards. That's the two scenarios that I'm watching. So I'd be mainly interested in shorting in this range until there's any difference. There's also not much volume right now. So I'm just expecting the markets to make at least more bottom tests before we continue to move upwards. So I'm expecting and waiting until we test 4.2 and 4.8, or when we flip 6.8. That's the levels that I'll be interested in longing. It's the same approach with Ether. If we take the levels here, we can see that we have rejected that 6.1, and now we are almost the same, making a scenario here in which we might be seeing some more movements towards 140, 143, maybe even 153, and then I'm assuming we're going to test the lower levels, in which I'm mainly focused on the area around 103, 107, and otherwise if we wick, I'll be interested at 83 and 92. I don't see any confirmation of any bullishness at this point yet, apart from the bounce upwards today. It's a good bounce up, but there's just nothing gained at all. We flipped the level here, but I just want to see new highs rather than that we are making higher lows here. It's okay, but that's basically it. At this point, I'm expecting that we're going to flip the 6.2 level, or the 6.1 level, sorry, 650, 6.1, flip it for support, might be wicking towards here, and then make one more move to 6.5, 6.6, maybe 6.9. I'll be watching for shorts here, and then we make the drop further down. That's the main scenario that I'm watching right now. I'm still a bit stunned by the measurements from the government, but I hope this video will still be helpful for you. I'll be making a new one tomorrow.